Well, good morning and welcome. You're watching Buy Now, Sell Now on ET Now. I am Harsh Saita. With me is Cheryl D'Souza. Over the next hour, we'll of course take you through a lot of queries that you all have started to send through. We have our eyes on that. But Cheryl, eyes on the market, a weak market to start off today as well after a week last week.
Oh, wow. It looks like you had a great weekend, isn't it?
It seems like. So Cheryl, talk to us about how markets are looking.
Absolutely, like the way you said, we started the week on a very weak footing once again, Harsh. And yes, we have actually drifted lower after making a tad bit of recovery on an intraday basis. If you look at the Nifty right now, it's hovering around 19,600 mark or so. Right now, just inching towards the day's lowest point as we speak. Talking about Nifty Bank, that's the spoil spot in today's trading session, underperforming the benchmark indices, 0.4% downtick coming in for Nifty Bank. As of now, if you look at the advanced decline ratio, pretty much neck to neck coming in for the advanced decline ratio. Talking about the list of gainers then, Bajaj twins are ruling the charts in today's trading session. In a short while from now, we will talk a bit more about Bajaj Finance and why also the up move on Bajaj Finance. Both of them are the top gainers on the Nifty, followed by Tata Consumer, Maruti Suzuki as well as Asian Paints. But on the flip side, and the losing end of the market, you have SBI Life that is actually top loser on the Nifty, followed by Infosys, L&T, TCS as well as HDFC Life. Add to that list, Wipro is also seeing a tad bit of weakness. So it will be fair enough to say that yes, IT is seeing some sort of a weakness and it is among the top sectoral losers in today's trading session. Is the PSU Bank Index that is the top sectoral loser. In fact, 0.9% downtick coming in for the PSU Bank Index, be it Canara Bank, Bank of Baroda as well as Bank of India, all of them seeing tad bit of weakness in today's trading session. Also, you have oil and gas, power, realty also in the negative side. But on the flip side, you only have the small cap index that's barely holding on to positive territory. But apart from that, there's not such a great movement coming in the markets. So that's all about the listed side of the markets and the way how the markets are panning out at this point in time.
Well, absolutely. Of course, you can start sending in your stock-related queries right up. But we'll quickly move on to the IPO side of things. That's been in focus, including IPOs last week as well. We have JSW Infra IPO opening for subscription today. It'll be the first company from the JSW group to launch an IPO in the last 13 years. Sharad is here in the studio to give us more details on the IPO. Sharad, talk to us. Well, what should we look out for?
Well, this week is very eventful for IPOs. Roughly 4,000 crore worth of IPOs is coming. SME board more than 12. Even in the main board, you are having more to 4 to 5. And now we're talking about JSW Infra. After 13 years, this IPO is coming from the JSW group. So now let's look at the entire IPO details, how it's coming out to be for JSW Infra. The price band is between 113 to 119 rupees per share, 1260 crore rupees, anchor investors, big names, GIC, as well as IPO size, if you look at it, 2,800 crore rupees, entirely fresh issue. The usage of proceeds, two things would be there, the payment of debt and also financing capex for their arms. Now, importantly, this is the second largest player in the private space when it comes to the port operations, and the first one being, of course, having a larger market share would be Adani Ports. Apart from this, the company has important maritime services. Two types of clients they have. First one is the anchor investor, which is the JSW group itself, and the second one is the third party, which has actually started coming in from the year 2018 itself. Now, they are operating 9 ports totally on concessions with an installed cargo handling capacity of roughly 150 million tons per annum as per June 30th. Looking at the valuation, that is something which the street actually watches out for. It's actually priced undervalued as compared to Adani Ports, and on FY24 basis on EV EBITDA multiple, JSW Infra stands at 13 times while Adani Ports stands at 20 times.
Alright, so that's about JSW Infra, and you said it's an eventful week when it comes to the IPO market this week. What was it last week and last week? We've been actually having a slew of IPOs, isn't it? And JSW Infra is not the only IPO that's opening this week, isn't it?
There's a lot of IPOs are coming in, and of course the market sentiment is actually fluctuating the grey market premium. That is why we are seeing a lot of volatility coming, at least on the listing price and the grey market segment as well. But now let's move on. There's a second IPO also coming in, that's the updater service. Now the company itself, just to put it in perspective, as a peer, we have Team Lease and SIS, which is basically staffing human solution. So now let's look at the IPO details. So overall, if you look at the listing date, it's expected to be October 9. Price is expected to be ranging between 280 to 300 rupees per share. Total issue size is 640 crore rupees, and Anchors, they actually raised a strong amount of almost 288 odd crore rupees, and FI's participation was there. Offer for sale is roughly 240 crores here, and fresh issue is 400 crores. Now over here, important thing is the company is offering integrated facility services, management services. They're the second largest player in this segment. And also, if you look at the financials itself, there has been a strong growth coming in, at least from the last year itself, more than 20% revenue growth. And overall, if you look at the adjustments coming in the PAT, that's why the valuations are not comparable with their peers such as Quest Corp, Sys and TeamLease.
All right, thank you so much for that, Sharad. These are only among those slew of IPOs that are set to open this week, JSW Infra as well as Updated Service. Thank you so much for putting into perspective, talking about the companies and what's the offer on the table. Thank you so much for that, Sharad. But let's talk about Bajaj Finance. Remember when we spoke about the markets, Bajaj Finance is among the top gainer on the Nifty, and it is in focus today on back of its fundraising plans. The board is all set to meet on October 5th to discuss the same. Let's first hear out actually what managing editor of ET Now Swadesh Nikunj Dalmia actually had to say on the fact that Bajaj Finance is actually going ahead and going to discuss about fundraising plan after a huge gap.
They are raising money when they don't need capital. They can easily go without raising capital for another 3-4 quarters. So why are they preempting a fundraise? They're preempting a fundraise, A, because liquidity may be available, or B, then they are looking at perhaps growing higher than the historical averages. Bajaj Finance has surprised that how companies at large scale can also grow. I mean, there are very few companies when they become large of the size of Bajaj Capital, they can have double-digit growth, and that too the best in the industry. So Bajaj Finance in a sense has delighted and surprised everybody. So fundraise is a clear indication that they are raising money ahead of the time, and this is growth capital. B, if one looks at Bajaj Finance, this I think is the most important point for me. The valuations for Bajaj Finance currently are cheaper than the pre-COVID levels, and they're even cheaper than the pre-LNFS crisis level. That is important, that they're raising capital, they're growing on a large base, and the franchise like Bajaj Finance is available at a price to book which actually is cheaper than the pre-COVID levels and even cheaper than the LNFS crisis. So that just tells you that right now it is not an expensive stock. It has not become Humpty Dumpty. Everybody likes it. Institutional investors, they own it. But in terms of valuations, I think it is cheap. You know, it's becoming quite strange to look at the private banking space or the private financial space where the sumo stocks are available at valuations like never before. Whether it is HDFC Bank, there are other factors at play. But for Bajaj Finance, which has been a survivor and it has flourished post-COVID, it is available at valuations which are cheaper than pre-COVID. How ironical is that?
Right, that was of course Nikunj's take on Bajaj Finance. But let me bring on board both our guests for today. Himen Kapadia, who's Senior VP Institutional Equities at KR Choksey, as well as G. Chokalingam, Founder and CIO at Economics Research and Advisory. Welcome. Good morning, gentlemen. Let me take it first to Mr. Chokalingam. Sir, tell us, what is your view on Bajaj Finance? How should one look at it?
Definitely one can hold on to it for three reasons. One, I am more nervous on small and mid-cap space, and I expect them to correct substantially in the short term, whereas large cap are likely to remain intact. Even if market falls, the domestic institution would come and rescue the large cap segment. So that's the first reason. And second reason, it has been doing extremely well on a bottom line front. Even in Q1 FY24, profit has grown around 26% year on year, which is really very impressive considering the base of the business, base of the profits. Thirdly, now they have proposed to mobilize resources, including QIP. So normally we see a perception-driven rally before QIP. So therefore, one can hold in the short term and hope for a target of around 8,200, and that is a price at which, or on QIP mobilization date, they may consider booking profits.
That's the take coming in from Mr. Chokalingam, who is continues to be bullish on Bajaj Finance. Very good morning to you, sir, and good morning to you as well, Heyman. And what's your view on Bajaj Finance? Yes, it's a news-based development. That's the reason why we are seeing that sharp perk up in the stock price in today's trading session. But leave aside today's performance. On the charts, how does Bajaj Finance look to you? Do you think it is a good, sustainable, quality bet that one can take if one wants to make money, at least in the short to medium term?
A very good morning to you, Petal. Thank you for having me. Short term, medium term, yes, I would be slightly more positive from a longer term point of view, Cheryl. We read 7,817. Historically, 3, 4, 5. There have been 5.5 attempts. Half, I'm saying half because it came to 79, not 8,000. So 5.5 attempts at taking out 8,000 on the weekly chart. Cheryl, or even if you look at the monthly chart, same story. So 5.5 attempts in the time frame is what 2.5 years. So if you've taken 2.5 years, made a consolidation phase between 5,200 on the downside and 8,000 on the upside, and still not being able to take it out. Now the setup is obviously positive. Oscillators are in a crossover buy on all time frame. Looks good. But we still need this formality of 8,000 being taken out. I believe that's on the way. Difficult to quantify a time frame at this point in time, Cheryl. But if and when it does, I think it will. We are going to go to 5 figures. So I'd say from a longer term point of view, I'd be much more positive, Cheryl.
Right. So both our guests quite positive on Bajaj Finance, Cheryl. So, but with that, let's slip into a very short break. Of course, we'll start taking queries on the other side, so do stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen very shortly from now. And you can write to us, mention your name, the stock that you're looking to invest in. If you're already invested in a particular stock, then do remember to mention your name, the stock name as well, and also the buy price if you've already purchased the stock, as well as the time horizon that you intend to hold a particular counter, because in that way our experts will be able to help you better. So that's all about how you can write to us, but also you can connect with our experts. And today our experts, we have Heyman Kapadia as well as Mr. Chokalingam joining us on the show. Very good morning to both of you once again, and thank you so much for joining us on ET Now. And let's connect with our viewers. We have the first query that I have. It's coming from Akhil. He's writing to us from Delhi, and this one is for you, Mr. Chokalingam. He is categorically writing to us and saying that he is an investor. So therefore, he is already invested in BEL, 3,000 shares at a price of 117. He wants to buy some more of the same stock. He's asking, does it make sense to venture into BEL at current market price, given the fact that we've already seen a sharp rally in most of these defense counters and they stay elevated, isn't it?
I have a bias against small and mid cap stocks at this juncture. Of course, this is a large cap with 97,000 crore. I would say that if there is any further recovery of even 5%, one should sell BEL. I believe there is a possibility of market correction overall. And also the defense stocks should, see the profit booking, and they should fall in the short term.
Right. Heyman, let me move to you. Harsh joining in. We have Queris Siva from Chennai who owns 2,000 shares of Oil India, average price 284. Wants to understand probably a 3 to 4 month view. What should he do with regard to his holding?
A very good morning to you, Harsh. I think a hold would be in order. The reason for the hold is Oil India is just about walking into its not all-time high, but a swing high posted in June 22. It is 306. We've gone to 297. So we've come within 10 rupees of its all-time high, and we've slipped into a correction on the daily chart. And if I look at the longer-term picture, it still seems significantly positive. There aren't any negatives. The oscillators are supporting the move, so I would say a hold. But it's going to be a slow journey simply because beyond 306, we are working into a further roadblock between 325 and 330. There is the congestion area, which is also the all-time high. So 306 and 325, 332 levels to watch out for. It's going to take time for these levels to get taken out.
All right, this next query that I have is coming in from Ron. He's writing to us from Mumbai. This one is for you, Mr. Chokalingam. He wants to know about a shift that he should take in his portfolio. So he has Bata, he has Biocon, and he has GAIL. So he's thinking, should he shift out from Bata to Barmalori Investment, from Biocon to Power Grid, and from GAIL to Coal India, because these are all long-term dividend yielding holdings. So he wants to know, does it make sense from his current holdings? Should he make those switch to those other stocks that he's mentioned?
All the three stocks I am not comfortable, which he is holding at present. I do agree with Bilil. Personally, also we own Bilil, Balmalari Investments. Certainly, Coal India is a great defensive stock. I'm pretty confident of 8 to 10% dividend yield. Plus, there's a lot of expansion plan of thermal power projects in India, and that require tremendous increase in the coal supply, particularly from Coal India, which will be positive. Biocon, I'm terribly negative. I may be wrong, but I believe that fall in the realization of biosimilars and also the recent acquisition of foreign company in dollar term and the consequent to fall in the value of rupee against dollar would be negative for Biocon. It's a great sell, I believe, and these are my recommendations.
Right. Let me move back to Himen, we have Raja, who's a senior citizen from Bangalore. He holds 2,000 shares of BHEL at $60 a piece, of course, making a very healthy gain there. Should he continue to hold this? What's your recommendation, especially short, medium term, and or should he just book out profit?
If it's a short to medium term view, I think he can book out Harsh. But if it's a slightly longer term view, hold for 150, 170, and 200. If the stock is in a multi-fold uptrend, a multi-year uptrend, so we are finally going to go to 200 over the next 12 to 18 months. So it's a clear hold. Once again, if he doesn't need the money, he can comfortably hold.
All right, very longish question coming in from Sagar, Mr. Chokalingam, but I will try and, concise it to the point that he's trying to make. So basically, he's asking a question today on behalf of his father, and his father has been a really, really long-term investor. But today's question is on the entire Bajaj group of companies. His father actually thought of a vision that the company had to, or the group had to offer. So he's invested in Maharashtra Scooters, in Bajaj Auto, Bajaj Finance, Bajaj Holding, also Bajaj Finance, which is now known as Bajaj Finance. And the levels of all of these are really minuscule when you look at it currently, because they have actually grown, I think, tenfold or so, because he invested in these companies before 2008 crisis. So he's saying that all of these companies have been fantastic, given good returns to his father. But he wants to know whether is there any headwinds that he should watch out for when it comes to Bajaj group of companies. Also, do you think is there any other group companies with such formidable return ratio in the next 5 to 7 years that he can look at?
Certainly, Bajaj Group has done well and created a lot of wealth. But I would suggest that he should, have some cash from these group companies, except Bajaj Finance. He can wait for a QIP thing to happen that they may consider. But otherwise, I am not worried about Bajaj Group, but I am worried about overall market. Rising oil prices, failure of the monsoon, inflation being above RBI comfortable zone, the political tension in Taiwan. There are so many other factors which are giving me a little stress on the overall market, including the state elections which are going to happen in November and December. And then the valuation bubble in the small and mid cap. So I think since he mentioned that it is held by father, it is better to be a little conservative, use cash and hold them, and also diversify across many sectors and industrial houses instead of concentrating on only one industrial houses, because Bajaj Group stocks are highly interrelated in terms of cross holdings. But I won't say that he should zero it, but certainly he should have a conservative approach. Other group to consider would be Reliance Industries Group, particularly Reliance Industries and Geo Finance. I am extremely optimistic about this. So that group stock one can add at this juncture for the long term.
Right. Just to put into context, actually, to just give you some of the stock prices that he's invested in. So, Maharashtra Scooters, he invested it at a level of 83 to 85 rupees per share. The stock right now is 7,500. Bajaj Auto, he's invested at around 200. Bajaj Finance at 30. Bajaj Finance at levels of 12.5 rupees per share. I like how Harsh is actually staring at my face in total awe, given the fact that these stocks have been nothing short of multi-baggers, isn't it, Mr. Chokalingam?
Certainly. I mean, one should give credit to Bajaj Group. They have done phenomenally well. The kind of growth the Bajaj Finance has achieved is remarkable, along with the Bajaj Finance. So, making money, you need to be a long-term investor. For that, you need to have a proper mindset. The 95% of the investors in the country today, they look at the rates even minute to minute, if not on hourly basis. So, a lot of people want return intraday, intra-week, intra-month, or at maximum in 1 or 2 quarters. So that is why it's a great opportunity for long-term investors. And it's more to do with the behavioral aspect of investing rather than identifying stock. Many can identify, but holding them for long-term only, in my experience, only 3 to 4% of the total investor base can do that. So this is the right example one should follow and stay invested for long-term. And definitely, Indian market is a phenomenal market to create wealth. You can't imagine the kind of wealth you can create from any other asset class, except to some extent real estate.
Yeah, so phenomenal, long-term wealth creators.
Tongue-tied, isn't it?
Yeah, absolutely. And especially Bajaj Finance, which has actually been, I think, one of the largest wealth creators in the last 15 years.
And actually, you don't even realize it, isn't it?
Yeah, absolutely. And it continues to go up, so fantastic. But with that, we'll step into a short break. Of course, we'll continue to take queries on the other side as well. Right, welcome back. You're watching Buy Now, Sell Now on ET Now. Thanks for continuing to watch on. I'll stick with the Bajaj group, because we've got another query from there. And Mr. Chokalingam, there is a viewer, Mayank Saraf, who holds 300 shares in Maharashtra Scooters. He's bought it more recently at 7,000 rupees a share. Wants to understand from you, should he add more from a long-term perspective at the current value, which is roughly 700 odd?
Yeah, I won't suggest adding more. If he makes even nominal profit, he should exit Maharashtra Scooter. As I said, I am expecting overall market correction of at least another 3% for Sensex and Nifty, and 5 to 10% fall in small and mid-cap space. So this is the time to book profit and conserve the equity wealth rather than becoming aggressive and deploying fresh money in the markets.
The next queries come from Anil Matthew from Kottayam, Kerala, and he wants to know about Maharashtra Seamless. He's already holding the stock, about 150 shares at a price of 212 rupees per share. He wants to know what's the future prospect of this particular counter?
Well, Cheryl, the prospect is bright, quite bright. We are at all-time highs, clear blue sky, no known resistance levels. So a close above 600, we continue the uptrend. I would suggest maybe at 650 plus levels, one can book a little bit of profit, but otherwise, any time frame, Cheryl, short term, medium term, long, stock is in an unequivocal uptrend. So outlook remains positive.
Right. Let me move back to Mr. Chokalingam. So we have a query from Hamsa from Madurai. Owns 800 shares in Indus Tower, average price 211. Wants to understand, should she buy more at the current price or hold or exit? What's your view on this one?
Very difficult to suggest buy. Of course, intrinsic value is quite deep and it deserves much more than the current price. But the only problem, all of us know that it is sitting on bad assets from Vodafone. And also Vodafone survival also is not very clear. Even if it survives, whether it will be able to generate cash flow to pay the vendors, that is also a questionable one. So therefore, instead of booking losses, the investor can hold on to the stock till it reaches the cost price.
Okay, Heyman, this one is coming for you. This one is coming from RK, and he's saying there are differing opinions about HDFC Bank stock. He's saying that he's holding 140 shares at a cost price of around 1,520 rupees per share. No profit during the last 2 years that he's made on this particular holding. So he wants to know what's the technical view coming in for HDFC Bank. Where is it headed? What should he do with this counter? Because I'm sure for 2 years, if you don't make any up move in this or upside in these particular counters, it's going to be very disappointing, isn't it?
But unfortunately, I don't think I have any good news for him from a technical point of view. The stock, I think there's no rocket science needed. It is weak, like you clearly mentioned, Cheryl. It's done nothing in the last couple of years. So, and that situation hasn't gone away. If I look at the daily charts, weekly charts, monthly charts, quarterly charts, everything is held on all time frames. And like you said, 1278, 1725, this has been the range in the last 3 years or so, approximate. And we've gone nowhere. And there is a distinct negative bias and overhang. Extreme short term, it's oversold. I think if it comes to 151512, I think a bounce is underway. But till it doesn't come back and close above 1550 on the monthly chart, high probability that we'll go to 1450. So currently visible. If you've got a very long term, you find, but otherwise, I think this whole thing to play out, it is on technical parameters, is wobbly, it's going to take time.
Right, it's going to take some time for HDFC Bank to move, but let's quickly move on. We have Satya, who's here with a query as well for Mr. Chokalingam. Firstly, wishes to thank you for your recommendation of BSE. He's bought it, he's doubled his money on that one. Wants to now understand from you, can he buy TTK, Prestige and Cummins for long term at the current prices? We know that your overall view of markets is not positive, but what about these two counters?
The TTK Prestige has slipped down on its performance. I would suggest him to wait for September results before taking any bet. Interestingly, despite the metal prices being down and suppressed, the company was able to post the kind of profit growth it has posted in the recent past. And Cummins also, the valuation company is not there. So I would not give any buy call on Cummins as well.
Mr. Chokalingam, another one coming for you, and this one is from Karishma. And firstly, Karishma wanted to thank the entire show and all of our experts on the show for helping her or guiding her rightly. She's actually exited the PSU bank holdings that she had with about 40% profit based on recommendations from our experts. Now, with the fund at hand, she wants to know where should she go ahead and invest that money for the longer term, Mr. Chokalingam.
Yeah, so this is the time to invest at least 50% in the large cap stocks, maximum 25 to 30% in the small and mid cap. This is for short-term strategy. And within that, a high quality stock only one should touch because there is a valuation bubble in small and mid cap. I would suggest as part of our equity research strategy, at least 10% cash within the equity assets. Another 5 to 10% one should put it in gold ETF. This is the broad strategy. And within that, I would suggest that stocks like Reliance Industries, Maruti, Geo Finance. So these are the names which come to my mind for long term. And also in the small and mid cap, I would strongly recommend Indoco Remedies. I believe the way previous some of my recommendations have rewarded in the pharma space, this one also would reward substantially. So these are some of the stocks the investor can consider for long term.
So I'd just like to also add a little subset to that question. I know you're in favor of Reliance, that looks very evident, but we have Subrata Mukherjee here from Calcutta. He wants to understand, if you were to pick between a Reliance and an ITC at the moment, which shares should he buy for the long term?
For long term, certainly Reliance Industry, but in short term, ITC may do better because it has already corrected about 11% from the peak. And the day they give the shares of hotel, it can show some momentum. So therefore, in the short term ITC, but long term, I would bet strongly on Reliance Industry. In fact, in next 4 years, the stock should double. That's my strong expectation, assuming there is no macro risk to the market or economy. The way they have done, on the build-up of business in retail and telecom, they would be able to do in many other verticals in which they are entering, like green energy, FMCG. So it is emerging as a mini economy. So among all the index stocks, I believe the Reliance is the best stock for the long term.
Right. This next query that I had actually was from Chandrasekhar. Just a second. I think I have missed his query. But Chandrasekhar had a couple of queries. Mr. Heyman, let me give this one to you because he's been making losses in a couple of holdings. One is Vedanta. The other one is UPL. Both of them are down approximately 22%. Also, the other one is Quest Corp. He's facing a loss of over 35% in all of these counters. Now he wants to know whether it makes sense to average out all of these counters, or should he look to exit, or what strategy should he adopt when it comes to Vedanta, UPL as well as Quest Corp, where he's making heavy losses. Heyman.
I think Vedanta, it's a sell on bounce. There is support at 220. We are oversold. Assuming 220 doesn't break, probably doesn't look like that. We're looking at 245, 250 in the next couple of months. So oversold, bounce should be around the corner. The other stock that you mentioned was Quest Corp. Hasn't done much. It's in a recovery mode. Not too much of data to take a longer term call. But as of now, I think it's a hold. We've seen almost a 1.5 year correction, almost running its course. I believe we are almost done. A weekly close above 460 should be the first technical green shoot indicating further upside. So I would say as of now, hold on a Vedanta to sell on a bounce. Quest seems more like a hold, Cheryl.
I'll stick with you. Raj from Vadodara wants to understand your views on HPCL. Can he buy at current market price? What's your view?
Well, if you have a slightly shorter term point of view, yes, we're down some almost 9-10 months in a row. The bigger picture still doesn't seem very convincing. But yeah, if I take a slightly shorter term view, 246, 268, this is the range for the last 4.5 weeks. The bias is turning positive, which I believe should finally result in an upward breakout. So yeah, stop loss in place at 250. One can buy for a shorter term point of view.
Right. Thanks for that. It's time to slip into a very short break one more time. Of course, you keep your queries coming through. We continue to take in your queries on the other side of this short break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. This one is coming from Atul, and Atul wants to know about logistics sector as a whole, Mr. Chokalingam. He's saying in the wake of G20 and the logistics sector, do you think that it will get a boost on back of this particular development that has already happened? We remember that India had 1 year presidency of G20 and now from next year onwards is going to be Brazil. But do you think Mahindra Logistics should be a buy based on this particular development, or fundamentally also you think makes sense to look at this one?
First of all, it's a positive development, G20 resolutions. But let us be very clear that this kind of initiatives will take years. If not more than 4 or 5 years, at least 2 to 3 years, it will take to make any meaningful beginning. So to react on that for logistics stock, it would be too early. As far as Mahindra Logistics is concerned, even we used to have a buy recommendation long ago, but then it has disappointed in the last 3-4 years in terms of profit growth. It's not able to make substantial profits and justify the valuations. So I would avoid Mahindra Logistics at this point in time.
Can avoid on Mahindra Logistics, Heyman. So let me take it to you. Rajesh Maheshwari from Indore wants your view. He holds GIC 384 shares. He's purchased it at the time of the IPO allotment that he received. Purchase cost 433 6 years back. What is your view from short to medium term roughly on this counter?
I would say a hold on GIC. The stock seems safely ensconced in a medium-term uptrend. And if I look at the longer-term charts, I think after a long time, I think since listing, this is probably technically the best situation GIC has been since listing. So I would say hold a rounding bottom on the quarterly charts, volumes at lower levels, indicator support, everything is fine, ticks all boxes, hold.
Heyman, one more query to you then. This one's come from Padma Siva Rao writing to us from Bangalore, and he wants to know whether it makes sense to switch out of SBI cards and instead look to buy Paytm instead. He has about 10 shares of SBI cards purchased at 850 rupees per share.
Okay, that is a googly that you bold, Cheryl, frankly speaking, because I don't have that much of data and I am slightly wary of these new technology companies. But yes, on technical parameters, Paytm does look better than SBI cards. I mean, without a doubt, the monthly picture seems much better, while SBI cards, despite some promise, is now set to give a downward breakout from its prolonged consolidation phase. So yeah, currently I believe that SBI card, it would make better. It would make sense to switch from SBI cards to Paytm.
Right, Paytm over SBI cards. It's that time of the show where we start a rapid fire round, and let me start off with Mr. Chokalingam. Mr. Chokalingam, we have Bharadwaj from Coimbatore. National Aluminium at current market price. Your view for the next 2 to 3 years?
Hold. It's a great stock for long term.
Right. Heyman, Elecon Engineering is the stock. Is it worth buying at current market price for good returns? This is what Vidya is asking from Bangalore. Heyman?
No.
Right, Mr. Chokalingam, if I can come back, 100 shares of Kalyan Jewellers is what a viewer, senior citizen viewer, has bought. Also, 10 shares of Solar Industries is what he has bought. Any views on either of these counters, Solar Industries, Kalyan Jewellers?
Book profits in both.
All right, Mr. Chokalingam, another one for you. Your opinion on MNC bearing companies, anyone that Sunil can look to buy currently?
Extremely costly. I mean, we looked at all MNC auto component stocks. I would avoid.
Right. We also have an investor here. I'll switch over back to Heyman. Medium and long-term price target wants to understand for Imami. He's a long-term holder, but wants to understand the short to medium-term targets on Imami.
I'm assuming Imami Limited, you're talking about us.
Right.
Short to medium target 620, 60.
All right, Mr. Chokalingam, can SEMA look to buy Coromandel Engineering for the long term right now?
Oh, it's a micro cap, extremely liquid counter. So if you can take enormous risk, yes, it's part of a great Murugappa group, but enormous risk is there.
Right, and Heyman, your view on Nelcast. Viewer has 100 shares or so. What's your view? Any view at all?
Hold, breakout, uptrend on all-time frame, all-time high note level, protect profit at.
All right, Dr. Ravi from Bangalore. Jamna Auto at a price of 124 rupees per share, 4,000 shares of this particular counter. Mr. Chokalingam, what should he do with this one? Makes sense and good company to stay put for a year or so?
Yeah, hold it. It has not participated in the rally in a big way. Hold it.
Right. With that, we're completely out of time on this edition of Buy Now, Sell Now. Thank you so much, both Mr. Heyman as well as Mr. Chokalingam, for taking out time and giving our viewers that perspective. But with that, from Cheryl, myself, and everyone who puts the show together, thanks so much for watching. Of course, markets at noon will take the action forward. So stay tuned.